are they all in one place, the manuals? Because I find
I
them in different places.
Yeah, each manual is under, so in the Trendex section is the Trendex manual,
Okay.
and the TDX will be the TDX manual. I can put them
Yeah.
all in one place if you want to
I
make that
think that
easier.
would be much better if it'll be easier.
Cool,
Actually, where they have
Because I was looking
online.
at the manuals, I couldn't find. Thank
cool.
you.
I shall do that 100%. All right, guys, let us start, because I know some people are on limited time here, and then we can always have a nice fat chat at the end. Cool, guys. Welcome to another easy algo training. Today, we are going to focus on my favorite indicator at the moment, which is Trendex. And a lot of people have been chatting to me because I did a presentation, I think it was last week, about how to use Trendex for scalping. And people have been asking, how do you use it for swing trading? People that don't have enough time. So in today's session, I'm going to focus on what you would do if you were looking to swing trade with it. And it's basically the exact same method and structure you would use if you were going to be scalping it, just on different time frames. So before I start, can you all see my screen over here?
Yes.
Can you see Trendex swing trading? Fantastic. All right, guys. So this is the swing trading strategy with Trendex. Before I start, I just want to go into this pivot grid as well, just to highlight that these are the details that are presented from Trendex, guys, and these show you key levels. Each one of these levels is a very valid level to keep in mind. Doesn't matter which one they are, they're valid. And even the previous day's ones are also valid. Sometimes I'll just extend the line across. These are showing you key areas on the chart. And whether you're on the monthly, the weekly, or the daily, the grid looks exactly the same. The only difference is it's just measured in higher or lower time frame spaces. So for instance, on a monthly grid, the resistance lines are going to be stronger than on a weekly, and a weekly is going to be stronger than on the daily. And of course, over here, see, so the gray ones are support lines. These two blues are basically the bottom of the range. Then we've got the actual pivot range, which is the pivot point. We've got the top of the range, and then we've got resistance 2 and resistance 3. So this is the pivot grid. And just keep in mind, each one of these levels is a very important key level. In the swing trading formula, it is exactly the same as the scalping formula. The only difference is the higher time frame bias, we're going to be on an 8-hour to 12-hour chart, and we're going to be on the monthly chart, on the monthly time frame, the monthly pivot. And the lower time frame entry will be the 30-minute and the 1 hour, and we will use the weekly for our entries. So with our higher time frame bias, we're going to be using the monthly pivot grid. If price is above the monthly pivot, we're looking for longs only. If price is below the monthly pivot, we're looking for shorts only. And you want to use around about a 12-hour time frame with the monthly pivots. I will use an 8-hour, 12-hour, somewhere around there, but any one of those is great. So what we're looking for, when you go into your chart and you put on the monthly, you want to make sure that price is above the monthly pivot. The monthly pivot represents the long-term trend. So if you see price above a monthly pivot, it's telling you that it is bullish on the long term. So first thing we're going to look for is price above or below the monthly pivot. Here's another example of price below the pivot. So when price is below it, we're only looking for short swings. If price is above it, we're only looking for long swings. Super simple. Then what you want to do is we're going to go into a lower time frame to look for entries. In this case, because we are swing trading, we're going to use the weekly pivots as our entry pivot time frame. And these are the long scenarios. So I'll be going into a lot of detail, breaking these all down. But we're going to be looking for longs when price hits the previous week low, support 1, either the break above the weekly pivot or the previous week high and resistance 1 break and retest. And then for shorts, we're going to be looking for shorts at the previous week high and resistance 1, or break below the weekly pivots, or previous week low and support 1 break and retest. And what we're going to do is we're going to look on the 1 hour time frame with these weekly pivots for these entries. So for shorts, I just explained in detail, these are going to be our key areas that we're going to look for, which I'll break down into more info now. When we look for shorts, we're looking on the weekly time frame, and our first entry place we're going to look for, and guys, this applies to any pivot grid, the daily, the monthly, the weekly. The top of the range, whenever you get to the top of a weekly range, a monthly range, or a daily range, this is a very good place to start to look for shorts, especially if the higher time frame bias is already showing that the market is downtrending, meaning that the monthly is underneath the pivot. If the monthly is underneath the pivot, then we're on the weekly here, and we're only looking for shorts. And these are the entry points where we'll be looking for shorts, either when price is at the top of the range. And when price gets into these areas, that's when we can also start looking for confirmation candles, which I'm also going to go into some detail at the end. You know, price gets to the top of the range, we look for confirmation candles, or if it breaks above and then breaks back below. But this is our first entry point. Second entry point is if price breaks underneath the pivot, and usually we get a retest back up towards the pivot. You can either enter on the break or on the retest. And our third entry will be if price breaks below this level, which is the previous week low and support 1. If price breaks previous week low and support 1, we can enter on the break or on the retest. The retest is always safer, guys, but I know a lot of people that do enter on the break. But if you wait for the retest and just keep an eye out on the confirmation candles, which I will be covering towards the end. So this is our format for looking for these short entries. Here's some more details on how it works. So number 1 would be looking for a short on the previous week high or resistance 1. So you can see price got here, just couldn't get quite through, and then it broke below. This is our place we're going to look for our entry 1. Entry 2, when price breaks below the pivot, either on the break or the retest. You can see we didn't even get a retest in this example. And then our third entry is going to be previous week low and support 1. So we keep it super simple. There's only 3 major areas that we're going to look for entries. But the first step is we want to make sure that the higher time frame is in alignment with our entries. So like I said before, in this example over here, price is underneath the monthly pivot. When price is underneath the monthly pivot, then these are the key areas we're looking for shorts. And these are our targets. So if we're looking to enter our first entry over here, which is the first entry position at previous week high and resistance 1, our first target is going to be at the pivot. That's target number 1. And some people, if you're scalping, you can just take your profits and move on, or take 50% off the table and then move the stop loss down and use trailing stop losses. There's many ways to do it depending on how you like to trade. But bear in mind, this is more of a swing trade. So these will be bigger trades as opposed to our scalping model, which is using the daily for entries. Then the second area will be if price breaks below the pivot and comes down to the bottom of the range, that's target number 2. If price breaks below the bottom of the range to resistance number 2, that's target number 3, and resistance number 3, which is target number 4. So you can see each one of these key levels that's projected within this pivot grid becomes a target area. So let's say, for instance, you enter at the top of the range over here at the previous week high and support 1. It's a stronger likelihood of reaching the pivot and a strong likelihood of reaching the bottom of the range. But then the likelihood of it reaching target 3 and target 4 becomes much less. So you will notice, and if I could show you some examples, most of the time it'll hit the pivot and hit the bottom of the range, but then the likelihood of coming down and hitting target 3 and 4 becomes less. So that is up to you, how you want to trade. You know, you could always take profits, and then move stop loss, and then see if it will hit target 3 and target 4. These are our stop losses that we would use. If we enter at the top of the range, we usually use these key levels as our barometer of where to place the stop losses. So if we had to enter at this break of the top of the range, stop loss just becomes on top of these two blue lines. And if there is a candle up here, it can also just go above the previous swing high point. And then our target would be, let's just say in this example, our target is the pivot. Otherwise, if we entered on entry location number 2, which is on the pivot, we enter on the break and the retest, and the stop loss comes just above the pivot, and we can target the bottom of the range or lower, up to how you like to trade. And if you had to trade option number 3, which is the break of the previous week low and support 1, the same scenario will occur. Stop loss will just be above these two blue lines, and we will target either resistance 2 or resistance 3. So this pivot grid gives us a defined area from where to place stop losses, where to take targets, where to enter. It really makes things so easy in keeping your trading on track, so you don't kind of come up with your own subjective ideas of where to enter, which it's very easy in trading to do that, especially since it's such an emotional game. Okay, now for long positions. These are areas where you look for long positions. So let's imagine in this example, price is above the monthly pivot. So for our swing trades, the first thing is we want to make sure is price above the monthly pivot. If it's above the monthly pivot, then we're looking for longs on the weekly pivot. And our positions that we look for our longs is number 1 would be previous week low and support 1. Number 2 would be break above the weekly pivots. And number 3 would be previous week high and resistance 1, break and retest. So these are the places where we would look for these entries. Number 1 entry would be at the bottom of the range. Remember, guys, these two blue lines is the bottom of the range, and at the top is the top of the range. So it's showing a range high and a range low based on the previous week. When price gets to the bottom of the range, this is where we have a very high probability of reversals occurring. And what we can do is we can also look out for these confirmation candles, which I'm going to show you in a bit, which candles you can look out for. So either price will come to this level, and you'll see, because remember, this will be on a 1-hour time frame or a 30-minute, depending on what you prefer. When price comes down to this level, we'll look for either a 1-hour reversal candle or doji, which I'll go through just now in this location. Otherwise, there's other ways to look for entries over here as well. But this is our first entry position. Second is when price gets above the pivot, retest on the pivots. That will be entry 2. Entry 3 will be if price breaks above previous week high and support, it's resistance 1, break, retest, and this becomes our third entry. So we basically only have 3 defined locations that you want to look for entries within these pivot grids. If price is not in these entry locations, then it's sometimes good to just wait or look for another trade until it is in that entry location. Keeps it very nice, keeps you on track. Here's another example, going into a little bit more details. So you can see in this example, price is actually above the monthly pivot. So when price is above the monthly pivot, we're just waiting for price to get to the low of the range. And you can see in this example, we got a reversal candle over here, which is kind of like I don't even know what candle this is, but whenever you see these big wicks, I always look at the wicks, guys. The wicks give you clues. If you don't know the candle names, just look for the wicks. Oftentimes you'll see whenever there's a reversal, we've got this doji. All of these are kind of like dojis, and they've all got different names. I mean, there's hundreds of different candles, and you really don't need to know all of the names of all of them. At one point, I was just telling people to look for the doji candles with the wicks. You can see over here, we've got a wick over here, another wick here. So wherever you see these wicks, it's showing that there's either resistance to the downside, it's pushing up, and they can be like spinning tops or hammers. So this would be the first entry location at the low of the range. Second one was when price gets on top of the pivot. See, price would have broken up over here already, and you might have entered on this one, and it came down. You might have been stopped out if you didn't have a little bit of a longer stop loss, but that is okay. We will get stop loss. We will get taken out. It's part of the game. And then we come on here, price gets on top of the grid, and this becomes another entry. Otherwise, price breaks on top above previous week high and resistance 1, and that is entry number 3. So 3 defined locations on those locations, if we had to enter at the bottom of the range, our first target's going to be the pivot. That's target number one. And a lot of people would take profits there. Other people would wait for the top of the range. If you do enter at the bottom of the range, you have the best entry. Entry number 2 becomes second best. Entry number 3 becomes the third best entry. But entry number 1 becomes the best because you have the biggest profit potential. It's always good to enter at the bottom of the range because it's one of the safest places to enter, and the possibility of catching a bigger movement up back to the top of the range is much more probable. So entry number 1 is the best. I know some people that only, a very good trader, which I learned so much from, he only used to enter at the bottom of the range. That is the only place he looked to enter, or the top of the range for his shorts. So entry number 1 at the bottom of the range, target number 1. If you enter over here, this can be target number 2. Otherwise, target number 3 and target number 4. So each one of these key levels, you can see it's kind of like block trading. You trade up to this block, up to this block, up to this block, up to this block. And you'll be so surprised to notice how price actually respects these key levels. Like oftentimes I'll see price will just touch the key level and it will drop. So remember, guys, this indicator is doing all the hard work for you. You know, most of the time, other traders who don't have this indicator, they have to mark up all these levels on their chart manually. And there's lots of room for error. Plus, it's really difficult to actually mark out the pivot grid in terms of whether it's wide or narrow. So this indicator is really making things super, super easy for you. All you got to do is just pay close attention to the levels and the entry points to know where you're going to enter. And oftentimes it's good to have this kind of marked out before the time. Like I will mark out my entry points on my chart before the time, you know, either at the bottom of the range, middle of the range, or top of the range. It's super, super simple. And our stop losses are basically the same as with the shorts, except just turned upside down. So what we'll do is if we enter our long at the bottom of the range, we're using these two blue lines. They are basically the area of showing us where our stop loss will go. So stop loss will go just under these two blue lines, and target number 1 will be the pivot. If we enter on the pivot, stop loss will just be underneath the pivot to target number 2, which is the top of the range. If we enter at the top of the range, our stop loss will just be underneath this range high, and our target will either be resistance 2 or resistance 3. So super easy, guys. We've gone over where the entry locations are, where the targets, and exactly how to set stop losses. And then when it comes to confirmation candles, so we want to look for confirmation candles at those entry points, at either one of those, mainly at entry point number 1 and number 2, if we're looking for longs, and entry point number 1 and number 2, if we're looking for shorts. So these are candles that I usually follow, and Pramod's also been teaching them. Like I said, there's hundreds of different candles, but to learn all of them is very unnecessary. There's only very few that you really need to know with the strategy that we're teaching. And for our long confirmations, we're either going to look for morning star patterns, which are basically these little candles. You can see they've got little bodies and they've got equal wicks on either side. And you'll see price will come down. It'll form a morning star pattern, just this little, because it's showing, guys, when you've got a small candle like this, it's showing there's not a lot of buying, there's not a lot of selling. It's almost showing a point of contraction in the market where the buyers and the sellers are becoming equal. They're equalizing in the market. So morning stars, so just familiarize yourself, you know, like understand morning star patterns, go on the chart, look at examples, start back testing morning stars. I'm currently also working on an indicator that can plot out these confirmation candles for you guys. It's a little bit of a process getting it right, so it might take a while to get it, but we are working on it to make it super accurate and to mark out without kind of marking out too many on the chart. Then over here, we've got the hammer as well. So the hammer is basically, you can see it looks like a hammer with a long kind of handle. And what it's showing you is that when it's got a wick to the downside, wicks are showing rejection to the downside, which is showing that the selling pressure, it's price is going down, but it's being pushed back up because there's too many buyers in the market. So it forms this candle. And this candle is basically showing you that there's this push of buyers pushing price back up, stopping the sellers from getting in control. And oftentimes when you get these, it also can show reversal points. And then short confirmations, we can use the evening star, which is basically the opposite of a morning star. Here's another example of what it looks like. It's kind of a little body candle with equal wicks on either side. This is also known as a doji. So these represent this equalization of the buyers and the sellers, because you can see it's got equal wicks. So what's happening is buyers and sellers are agreeing to a fair market value. It's kind of equalizing at this point, especially if price was going up and up and up, and then you see one of these candles, it can be showing weakness of the trend now that there's no more buyers in the market and the buyers and sellers are equalizing. So you can see we've got a big buyer candle going up. Then we've got this candle, which is showing that the buying is actually slowing down and it's becoming equal to the sellers. And then we've got a big sell candle, which is showing this reversal. And then we've also got shooting stars, which is also pretty much the opposite of a hammer. It's basically an upside down hammer. And you can see we've got the hammer and we've got the actual handle over here that you would hold onto. So when it's got a big wick to the upside like this, it's showing you that price was trying to go up, but then there was too many sellers in the market just pushing price down. And when there's got lots of sellers in the market, it'll push the price down. It'll form these big wicks, which is showing price kind of being pushed to the downside. And these are great candles to look at for changes and reversals in the market structure. So another one which is also good is engulfing candles. So you'll notice an engulfing candle. These are quite easy ones to pay attention to. It's just showing you a point where there's either a bearish candle that's bigger than the bullish candle, or a bullish candle that's bigger than a bearish candle. So you'll notice, like, if price is going up and up and up, all of a sudden at a high point. Now, remember, guys, these candles, you're not just going to enter whenever you see them. You want to find these candles in those entry locations that we've covered today. So either entry 1, entry 2, or entry 3, we're going to look for these kind of candles. So it's not just looking for the candle anywhere in the chart. They have to be located in those precise entry locations. If price is coming down to entry 1 and we see an engulfing candle, that can be a strong sign to look for an entry. If we see a morning star, that can be a great sign to look for an entry. And towards the opposite side, if price comes to the upside here and we see a bearish engulfing, that could be an entry. If we see an evening star, that can become an entry. So these candles, you want to use them in these locations. If price breaks below an entry 2 and we see a bearish engulfing, that can be an entry. So it's very important to not just look anywhere in the chart, but make sure that when price comes into our entry locations, 1, 2, or 3, that is when we want to look for these candles in those positions. This will help us a lot. It'll help you a lot, because when I started learning about candles, I was just, anytime I saw one of these candles, I was so ready to enter. And oftentimes it can be a little misleading. But when you've got precise entry location with confirmation candle, that acts as a much stronger confidence than just entering on a confirmation candle whenever you see one on the chart. Cool. So I'm going to take you onto the charts, and I'm going to kind of break down this formula for you on the chart so you can actually see what would look like in action. So let's move over to my chart over here. Okay.
Can you hear me?
Yes.
Check 1, 2.
Can hear you. Sounds good.
I can hear you. I'm on a Zoom meeting at the same time here.
Oh, nice, man. Okay, let me, I got the wrong tab open here. Okay, there we go. All right, so I'm going to quickly go over these examples for you. that I was talking about today. So remember, I'm talking in this example, I'm basically going through swing trades, but it would be exactly the same if you're scalping, just on different time frames. So for the swing trade, we're going to be using the monthly as the higher time frame. And I'm also looking into, because PowerFriend suggested to me to make a yearly pivot, which we're going to pretty much implement that pretty soon as well. So there'll also be a yearly pivot coming soon that you'll be able to use, a yearly, a monthly, a weekly as well, if you really want to get into these swing trades. So as you can see over here, I'm going to just clean this up a little bit for you. In this example, I want to use Alice over here. In this example over here, we'll see this was great because we looked at, if you look at the monthly over here, you can see we've got a super narrow pivot. And as you guys know, the narrow pivots mean that it's going to be a trending month. So if you are going to be swing trading, it can really help to make sure that when you're looking for your higher time frame bias, so remember the monthly is going to be your higher time frame bias for your swing trades. Time frame bias. With this higher time frame bias, it does help to look for more narrow grids, especially if you want to catch nice big movements. So that's one of the things. It doesn't have to be a narrow, super narrow one. It can be kind of a semi-narrow as well. But I just noticed whenever you get these really, really tight, narrow, I mean, you can see it looks like one line, but it's actually 3 lines on top of each other. This just means that there's going to be a big movement. And then you can see at this place over here, this was the location. I'm just going to mark it out. This was the point where price actually started the month. So a great tip, guys, like in a few days now, I think it's 2 days time, we're going to get the new monthly pivots, which is like, I love looking at the monthly pivots because whatever they tell us usually lets us know what is going to happen for the next month. You can see this was the start of April. When April started, majority of the tokens ended up underneath. They first of all either opened underneath or ended up underneath the monthly pivot very soon. This is a strong sign now because the monthly pivot represents your long-term trend. If price is underneath the monthly pivot, that means on the highest time frame, on the long-term trend, things are looking super bearish. And oftentimes it will last a whole month. Like you'll see when this monthly opened up, price got underneath, and the whole month, basically, it's been bearish on most of the tokens. And if we look at majority, like if you look on the Scanner X or even just scanning through the charts, majority, I think it's like 95% of the tokens have been and are still underneath the monthly pivot. So I'm very much looking forward to seeing on Wednesday, I think it is Wednesday, when the new monthly pivots come out, is price going to be above or below those? And that's going to give us a lot of information as to what's going to happen in the next month. So in this example, you can see we've got basically a tight monthly pivot, and at the start here, price dropped under the pivot. But also look here, guys, when this month opened, price was also broke underneath the weekly pivot, and we've also got a narrow weekly. So the start of this month was pretty great for shorting Alice because it was a narrow monthly, it was a narrow weekly, and price was underneath it. So we know at this point, we're only looking for shorts in the market. This is showing us that this asset is super, super, super bearish. And I mean, you can also add an EMA. Sometimes you can add an EMA into the mix as well. And you can see at this point, okay, this is a 200 EMA on the 1 hour time frame because we're looking on the higher time frame. And you can see it's also super bearish. It's underneath the EMA. It's underneath the pivots. Super, super, super bearish for this token. So then we would only be looking for shorts. And it's different. If you're doing the scalping strategy, the monthly pivot doesn't matter that much. If you're doing the scalping strategy, you're only looking at the weekly as your bias and the daily for entries. But in this swing trading strategy, we're looking at the monthly for our bias and our weekly for entries. And you could even look for daily for more precise entries as well within this. But we basically, everything's running off of the higher time frame bias first, which is the monthly. So in most trading strategies, you always want to look at the higher time frame first. You always want to find out what is happening on the bigger picture. So that is why it's super important for us to look to the monthly first to understand what is actually happening with this asset. And you can see here, so prices underneath both of these, our entry locations, this would have been our first entry location. This is entry number 1, right over there, which is the break. Oh, wait, no, this is entry number 2. So entry number 1 is actually over here. But at this point, price was above the weekly and above the monthly. So we wouldn't have looked to short over there. Remember, we got to stick to confirmations. So we would have waited for price to break under here, and this would have been our first entry zone. So, I mean, this is entry number 1, but we would not have taken it. We would have entered at entry number 2. And then we've got entry number 3 over here.
Seth, can I ask something? That's confusing. Now, from all the education we have, is that when the price is, when the weekly is above the monthly and the daily is above the weekly, and the trend is going up. That's what Ramad said. You always go for long. Now here, what makes you think once it goes below the weekly and it's hitting into the monthly that you have to take the short? What's the confirmation for you? I mean, it could come back and retest that and go up. And what makes you take the short from the first, second position, not the top? I mean,
at this position, yeah. Just the fact that price is breaking below the monthly and the weekly. That would be, that's enough, yeah. If price is underneath the monthly and the weekly, then that's going into very bearish territory. So you can wait for a retest, or you can just, oftentimes what will happen is price will break under here, and it will either retest or find support, and then it will drop. But in this example, because we've got a narrow weekly and a monthly, but that is all you need. If price is underneath the monthly and the weekly, you can go bearish until it gets back on top. Price would have to reclaim again for me to go bullish again. Then I'm bullish. So I'm bullish if it's above here. I'm bearish if it's below here. That's the confirmation. You don't really need any more confirmation than that.
Thank you.
Pleasure.
Seth, can I ask? Sorry. So
yes.
At the beginning there, then at the start of the month, would you have gone long? If I was to take a trade right at the beginning and then take profit at the swing high? Yeah. Okay.
This would have been your long, because if the market at this point, I would have been very bullish because the market opened and I see prices above the weekly and the monthly. This would have been the best place to go long. Best place to go long.
Great question.
And then you'll see things turned around. I mean, a lot of people might have even been stopped out here because they would have entered long, thinking that now this is going to be a best swing trade, and then it suddenly drops below, and then they get taken out of the market. But I mean, if you're just a shorter term trader, you could have just traded this to the swing high. You could have entered over here, and you could have taken your profits at the high of the range, which was still a decent. It was 5%. But you see, we never know. We never know that this would have suddenly turned around and dropped underneath. But what a good thing to do is that this is why I love that Scanner X so much, because it's got the sentiment scanner on it on the first page. And if you keep monitoring that, it monitors, remember, crypto, even though you're trading in an individual token, you're actually trading a wave of tokens. So I always look, if the majority of the tokens actually end up dropping below the monthly, it means it'll bring the other ones down as well. And there'll be one or two that won't be affected, but the wave of the market will determine what's going to happen in the market. So like this one, there might have been one or two that kind of did look long here, but if we had looked at the sentiment scanner and seen maybe like 90% were bearish, this might have also made you just be a bit more cautious in this trade. So often you can get a little bit more insight by monitoring the collective movements of the crypto market at the monthly opens and the weekly opens, which that sentiment score on the Scanner X is fantastic. I'll actually show you guys how I use it in that example. I've just got to change.
Question.
Yeah.
So
yes.
Since you were talking in the beginning of that, on the monthly when it printed the new monthly and it was above, you thought it would be bullish. You went ahead and I guess bought at that bottom and then sold at the top of the range. And then it came
Yes.
back down. How many candles where you would have to wait for confirmation to see that, okay, maybe it's gonna play that range and maybe come back up to the top again before you would just enter? Or do you, because I know you just don't blindly enter at the bottom again and just say, okay, I'm gonna write it up again.
I would wait for it to, you mean if I came to, I would want to see some kind of like support being built here.
And how long do you wait? Like how many candles do you wait for? Like when do you know it's a good confirmation to go ahead and enter again?
I would wait. What you can do, it can form a little range. And then what you want to do is you want to wait for a break of the high. This would be the confirmation example. It would form here. And then if it broke this, so it would form like
You can't see the screen at the minute.
Oh, you can't see it. Oh,
No.
let me see what happened to my screen sharing now. Sorry about that. Let me get it back for you.
Yes.
Oh, there we go. Can you see now?
Yeah.
Okay,
That's
great.
it.
Okay, so in this example, let's just say price came down and you were looking for another long position here. I would wait for either support to develop and then for price to break the top of that support. And this would be the place to look for an entry if price can break the support here. I always look, this is my go-to in pretty much, does that make sense, that pattern to you? I can show you examples if it doesn't.
Not really.
Could you show me furthermore, please?
Yeah, for sure. Okay, let's find an example here.
I think Eddie was probably asking about how, like from the very top of that peak,
from
like
the top.
where would you start looking for a continuation of the long? But I'd say
Oh, he got it right. That's what I was also. That's also what I was looking for. So,
I think Pramod made it clear, like once you TP at the top, like you just quit the trade until you finally find a confirmation.
Otherwise, like you would do the same thing over here. You know, I'd mark out these. I'll show you in a 5 minutes what this would look like. Exactly how, because, oh man, where did I put this thing now?
That's great.
I've lost this thing.
Flatlined it.
Oh, there it is. Okay, what I'm going to do is I'm just going to mark that off here to show you. Okay, here we go. I've got it. Okay, so what you do is this is something that I use a lot, and it's really, really handy. It's like super, super helpful in just understanding these breaks. So if price came to the top over here, you can see this was the break. So like, and I'll draw it over here. So it came up, it formed, can you see it formed a little bit, and then it broke that support level that was created like that.
Change of character on a lower high.
Yeah, exactly. It's a change of character happening. So it's breaking change of character, and then it's coming up, it's tapping into the supply zone, you can see, and then it's dropping from there. So those are the kind of things I would look to get out if it broke that. But otherwise, you could just get out here. You can see we've got an evening star candle. Can you see there? I was just showing you guys the candles. It's an evening star candle, and it's at the top of the range, which is the perfect place that you want to see it. When you see one of these reversal candles close to either the top of the range or the bottom of the range, that is also a strong sign. Here's also another doji as well. So it's just showing weakness is occurring, and then kind of breaks and then goes all the way down. So those are the
Can we use
the cluster? It formed the cluster there, and then it revisited the cluster and broke down. So it's clear.
Yeah, exactly.
Can we use TDIX?
So
Will that give
you can. Yeah, look at TDIX as well. Look at that. So you can open TDIX as well and get great confirmations. You can see we've got a shark fin over there, which is happening right. I mean, the shark fin happened exactly where this evening star candle is. So that can also be a very strong confirmation to mix. You can see, and we've got a shark fin. You can see we've got a super shark fin. We've got a evening star candle at the high of the range. That could be a great place to take profit, because oftentimes, you know, this is what about not being greedy in the market. You know, price doesn't move in straight lines. It's going to move all the way up. And a lot of the time it's going to drop before moving up again. So you can take profits or you can watch your profits disappear. A lot of times you'll see your profits will disappear if you don't take them. And often just taking profits at shorter little intervals, like from block to block, can actually work out more profitable in the long run. Because
Seth.
Yeah.
Seth.
Yes.
Just as a point, you entered this particular example. This is the same piece as we looked at on the monthly stroke weekly, isn't it? You just broken it down into 5-minute chunks. The whole point of the swing trade is that you set and sort of forget. You wouldn't be sort of looking at the 5-minute chart waiting for an exit. So the chances are this one would have probably gone to your stop loss. Would that be fair? Or am I not doing the right amount of work? Because
no, you're right.
If you're swing trading, then you're not going to be going to the 5-minute going, right, I got to find an exit any minute now.
No, you wouldn't.
You're expecting to take profit, or you're expecting to go hit your stop loss. That's my understanding of swing trading. Is that
yes, it is. No,
about
100%.
right? Or okay.
No, you're 100% right. That's why I said in the beginning, like in this position, you probably would have been stopped out if you were taking a swing on this, because it just went up.
No, sorry, I missed
it
that
looked
bit.
like it looked like it was bullish, and then it just kind of the market just turned, and this was a complete fake out. You can see. And this probably took out majority, like so many traders probably got liquidated here, because this looked like, oh, the market was bullish. And then look, it just had this massive drop, which came down like 12% and probably liquidated so many people. So, I mean, the market is going to trick you. And then at this point, this would have been the place to enter the swing position over here. When price broke below, this would have been your perfect. This is the entry location number 2. Which would have been the best place to enter. It's the same thing, you know. We're basically doing the same thing over here. Prices above the weekly and the monthly, we enter long. Okay, that didn't work out. Over here, prices below the weekly and the monthly, we enter our short. Because it's not always going to work out every time, but most of the time.
So would you wait for a
out
candle close on that one, Seth, where it breaks down below the weekly monthly? You'd wait for the candle close, but the candle close is quite a long way down. So now that's not really a trade, is it?
No, the thing was that this dropped down so fast that you would have rated for a retest. So you can see it came down, then price came back up. So you probably would have entered over here or over here. Maybe this one would have been your entry.
So now we're sort of bending the rules a bit. Or is the rule, if it gets quite close to the pivots, we can take it?
Yeah. No, you're not bending the rule. It's close enough. It's very close.
It's close enough. Okay. Yeah. That was another question I had for the weekend when I was paper trading it.
Kind of like,
I was thinking, is that close enough? And I thought I better just ask on the next call.
Yeah,
because it turned out to be profitable, but yeah.
Because you've got to think of it as like a range, you know, it's never going to work specifically on a line, you know, so there's got to be like a range that you can play with. But it's just if it gets close here and you can see, okay, I mean, over here, you can see we've got resistances. If we draw the top here, you can see, look, it's a resistance. Price is hitting this resistance. It's not breaking this level. So you could have entered probably on this candle. You can see it's an engulfing candle. Can you see this is an engulfing candle here? One of the confirmations.
But again, on that one, so you know, again, the close of that candle, Seth, I'm not trying to be picky. I'm just trying to understand the rules.
Yeah, of course.
It's an engulfing candle, but it's even further down away from your pivot, right?
Yeah, but is it not that you're looking on the retest, so you're looking at the previous closing candle, and that is the retest, so your stop loss is going to be above the monthly, and then that's higher. If you take the closing of the green candle, the first candle, that's the retest.
Sorry, I don't understand what you're saying.
If you're taking out the closing of the engulfing candle, but the retest occurs on the closing of the previous candle, and that's much higher.
This one here, you're saying?
Yeah.
Yeah, exactly. But the thing is, we're waiting for confirmation. So like, I wouldn't know, like, I don't know if that's going to go higher or not. So then I would wait for a confirmation candle, which would have been this engulfing candle.
Yeah, okay.
You see, because we don't know, like if I just entered on this, it could have just shot up. I don't know for sure. And I mean, okay, this looks like this could have been a little bit of a confirmation. This candle over here, you can see this is a reversal doji here. So that could have been a confirmation. If you'd entered over there, you still would have been right because price didn't get past this level. But if price got here, I would have marked out this level because we're forming as a resistance level. Price hits here, hits here, hits here. Doesn't want to break this level. So it's finding resistance at this point. And then I'm just looking for a candle and I see this engulfing candle, which I would have entered here. And my stop loss in this scenario, I don't think I would have even had my stop loss here. I would have put my stop loss just above this because otherwise you're going to have too big a stop loss. So it's applying a bit of price action into this, but that would have probably been the entry. But anyways, okay, so then if we had entered into that position, so like see this area over here, if we'd gone into a lower time frame, so I mean, just because we're entering swings, okay, this would not have worked because look, we had this massive drop. But sometimes on a lower time frame, you'll see price breaks and there is like an entry you can get over here. But this would have not worked. But also notice this, guys, when you've got such a big break, can you see this candle? It's broken so much structure when it broke this candle. So this is also a strong sign that there's massive like bullish pressure, I mean, bearish pressure taking over the market. All of a sudden, so many sellers are in the market. These massive candles are coming to the downside. So that's already a strong sign that, okay, the sellers have stepped in. So now we're just looking for an entry. And obviously our entry is going to be as close to this pivot as possible. Got these retests.
And how would you differentiate that from a fake out, just out of curiosity? Because you know, in crypto, you see so many fake outs. How would you differentiate that as a seller's getting in as opposed to somebody just trying to fake out?
I mean, all you can do is read the charts as a technical analysis. All I could see is there's these massive sell orders that have happened. It could reverse at that stage as well. Like you don't know. You absolutely don't know. And that's very hard to be able to kind of predict.
So it's just probability. So that's fair. I just wanted to know if there was a telltale sign between a fake out and, you know, a smash in the market.
I mean, this, you know, you can see here at this point, price went up, it was super bullish, and then it dropped. So, you know, like it tricked everyone thinking the market was going up. And I know a lot of people who actually got stopped out of this exact trade because they were like, the start of the market seemed like the whole market was bullish. I think even Sheldon was like, everything was looking bullish. We were all bullish. And then all of a sudden it did this bullish run and then suddenly just dropped and took out everyone because so many people were entering into the market over here thinking that it was going to be the perfect place to enter a long position. And then they got taken out. And then all of a sudden it creates a lot of fear in the markets. And, but I mean, if we're just looking at this, we can see that would have been the perfect place. And remember, if you're doing a swing trade though, like you would have taken profits either at the bottom of the range over here, resistance 2, resistance 3. So these were still would have been, let's see what would have been 11%, 14%.
Not resistance 1.
I mean, support
50% off resistance support. Under
this is support 1, support 2,
support 1,
support 3.
You wouldn't have taken profits at support 1.
It just depends if you're doing more of a swing trade, because remember, if we enter at this break over here, it's not that much. Like if you're going to do a swing, I would have definitely taken profit here because I'm not really a swing trader at all. I like to just get in and out because it's so easy for price to reverse. I mean, you can see if you got in over here and hit here, you would have had a very, very good trade actually. But like you were saying, your question earlier was, isn't the point of a swing trade to just leave it and let it run, you know?
Yeah. Well, you set your profits and then hope it hits take profits as opposed to your losses.
Yeah,
so
exactly. Exactly.
Because if you're not going to do that, then you might as well, from what I can tell from Emir, you might as well snipe and make 100% in a day.
Yeah, exactly. I mean, if you can make 100% in a day, that's...
It's about time as well, isn't it? The key is about time. So I work full time and trying to do the sniping tactic during the day while I'm supposed to be working is problematic for various reasons. And
yeah, of course.
And
that's
this is
sure.
about, is there a way I can make some money, lots of money, not having to watch the screen every minute for a whole day, every day, right? That's what I'm looking for.
Yeah, that's very understandable. I mean, sculpting requires a lot of attention, and yeah, it's definitely, if you don't have time, then you want to stick to this kind of strategy. So you can see over here.
Then, slightly off topic. While we're on that screen, I think you just move. No, can you just hold on just for a second here, just there.
Yeah.
Just hold your screen. On the right hand side, you've got wide pivots, right? And just imagine the one on the right, the one on the right.
This one here. Okay, yeah.
Yeah. So you got wide pivots. Just imagine, for argument's sake, they're narrow, just for the sake of this demonstration.
Yes.
Now you got it on the weekly. You've got three. You got the yellow middle, top, and bottom. We'll deal with that one first, if you don't mind. So where do you wait for it to touch? Any of the three, or the middle one, or which one? If you're going low, if you're going bearish, would you wait for it to touch the top one, middle one, or it doesn't matter? It's just your choice. And if it's going long, obviously,
I would wait for it to break under all three of them.
No, yes, I know, but your entry, would it be on the bottom one, on the middle one, or on the top one if you're going short? Or it doesn't matter? Short, it's your choice.
Wait, you're talking about these three lines here?
No, the one on the right, the slightly wide. I'm just trying to, for demonstration, just so we can see the difference in size.
You're talking about this
one. If you just hold it there, yeah.
Okay.
Would you take the trade? Is it important to take the trade on the bottom pivot, the middle pivot, or the top pivot in this particular case?
In this particular case,
or does it not make any difference?
I probably wouldn't. I honestly don't like trading if I see wide grids like this. But
no, just forget about it if it's wide. Just imagine it was narrower. I'm just making a wide one just so we can see the difference.
Would be underneath.
Underneath.
Would be underneath for sure.
Fine. Yeah. And then the blue grids, the blue bars at the top take profit 1 and 2, I think, or no, one or last price high or something. Last high. The two blue bars just above it.
Yes.
Again, the trade there. If they're very close, if they're close, if they're touching, it doesn't really matter. But if it's wide like this, would you wait for it to pass the top one, or
no, the first one,
bottom one, or does it not matter?
It would wait for it to touch the first one. This would be the one I'd wait for. If there's
a short, you wait for the bottom one.
If it's a long, I want it to get on top of both.
Okay, and if it's a short, the bottom one.
Yeah, then if it's a short, short, it's got to break below both.
Thanks, Seth. Appreciate that. Clear the confusion. Thank you.
Great questions. Yeah, it's got to get above both. So these two blue lines, they represent very strong resistances. So it's a resistance point and a previous week high. If price can get over this resistance and this previous week high, it's showing that there's a lot of buying strength for longs. If it gets underneath it, it shows there's a lot of selling strength for shorts. So the top of the range, these two blue lines are basically, I've made them blue together to show the strong resistance and support area. The price has to actually break it. It's showing that the chances of it going higher is very, very strong, because for it to get past here. But when it's narrow like this, it's much easier. You see, much easier for price to break through when it's narrow. When it's wide like this, it's much harder for price to get through both of them. Yeah. So oftentimes on these wide grids, price isn't going to even make it all the way up here. It's very unlikely.
So in that case, you would take profit at the lower one just in case it doesn't break through the second one.
Yes, exactly. With this grid over here, this is not a grid. With this grid here, you want to take your profits much lower than with tighter grids. So like if price was here and it got up here, I'd be looking for profits very close to this area, because chance of getting through here it's much harder when we've got these wide grids, because this is showing there's more of a ranging week. You know, when we've got wide grids, it's showing more ranging. When you've got the narrow grids, it's showing more trending. So like in this example, this would have been a very nice example over here. This was very textbook. You can see we're underneath the monthly. We wait for price to get under the weekly. And this basically would have been our entry over here or entry over here. If you'd missed that one, these would be our 2 entry points in this region here. And then
thank you.
You can see it just dropped from there, dropped into the low of the range, broke here. I mean, you wouldn't have even had a chance to enter here. This would have been the next place to enter. Maybe not in the 1 hour. If we went into a 5 minute, maybe that we could have caught an entry here. And then you can see it hit all the targets, and then it hit exactly, resistance number 3. And then we got this, you can see hit it exactly. And then it bounced and it found a little bit of resistance here and then dropped further. And then the next week, you can see it opened up underneath. Some people, like I know Pramod would have probably done this because he does this kind of stuff. You could have entered a short from here. I mean, look at it, the market, because also, guys, you want to pay attention when the market opens. Is price opening underneath the pivot or above the pivot? If it does open underneath, it's a much stronger chance that it's going to be going down. But, like, okay, we got this fake out over here where the price opened above the pivot and it went up and down, but doesn't always happen that way. So in this example, this still would have been an entry you could have taken for a short scalp. You can see we've got a demand zone over here. So you could have entered at this, exited at the demand zone. Especially because remember this grid, I'm only saying that because when you've got a wide grid, you want to focus on scalping. These grids are more scalping grids because price is going to range, and if price is ranging, you're going to see your money. You're going to make profit, then you're going to lose profit, then you're going to make profit, then you're going to lose profit. And in more of a ranging market, you got to take profits at lower points. At the highs and the lows. You can't wait for a trend until obviously this is the advantage we actually have with TrendX is because we can look at the pivots and we can actually calculate what entries, what trades we're getting into. And then I think this is where we are today. So right now, guys, like the markets are looking like something is going to happen. And I'll show you, I've been looking at all the weeklies. If I open up, so I took the list of narrow weeklies that's in the group, in the narrow section, and I opened a lot of them up, and you can see we've got very, very tight as opposed to the previous week. I'm going to show you. See, remember what I said before, everything moves in a wave. The crypto market moves in a wave. So whenever you see one thing happening, you're probably going to see a lot of things doing the same thing. So what I'm noticing is these tight grids. I mean, look how tight this grid is compared to the previous day's grid, the previous week's grid, and then the week after that. So you can see we've got the squeeze happening. This is getting tighter, then this one is getting tighter, and then this one is getting tighter. When you see these squeezes happening, there's something is going to happen. That's why I'm very excited for Wednesday to look at the new monthly pivots to see what's going to happen, because if we get majority of the market opening above the monthly pivots and holding above the monthly pivots, we could be in for a very nice bullish month up ahead, because things have been quite bearish for a while. Can you see here? Look here we've got this is an inside pivot. Remember, if you I don't know if you watched Pramod's training a few weeks ago, he's talking about inside pivots. Inside pivots are showing us big movements are prepping up. So you can see we've got an inside pivot over here. I went through most of these and I ended up seeing the same thing. You can see we've got a slight inside pivot. On sushi looked really good. Look at that tight inside pivot. So an inside pivot is where we've got a new pivot grid that is basically inside the old pivot grid. And here you can see that we've got this pivot is this one is higher than this one. So we've got an ascending pivot as well on the weekly. But still keep in mind that majority of the tokens are still underneath the monthly, right now. You can see underneath the monthly. You can see here, it was above the monthly. We had this bullish movement to the upside. below the monthly, bearish, move into the downside. So the monthly is a strong barometer, guys. The monthly is a strong barometer. I always look at the monthly regardless of what I'm doing, because it can really help you. You can see above the monthly here, we had a very nice big movement, like 70, 80%, 80%. And then the next month, we're still above the monthly 40%. The next month, it's below the monthly, and we get this down. So if you backtest and you see every time, look, it's underneath the monthly, and it's bearish, above the monthly, bullish. Okay, over here, this is not the best month because you can see wide grids. So it's kind of just this ranging. So we could always pick another token if we saw that. But here's more examples. Look, we're above the monthly. We got this swing, this long swing. Below. So use this barometer. It's so amazing, guys. This monthly grid can help you so much. And then the weekly, I like to align them all. If I can see that the monthly, the weekly, the daily are all aligned, it gives a strong confidence. But it's not completely necessary for scalping, but it can still make a difference. Like right now in sushi, so the reason I was looking at it as well, you can see here, look, price is forming this resistance point over here, which is also a key level. So if price breaks above that, so like that's why I like to do the price action stuff, and then you overlay it. You overlay the price action with TrendX. So you'll see here. So now look, I'm looking at this over here. I can see that this red line over here that I drew is it's where price is hitting resistance point. You can see price has hit it once, one resistance over there, resistance, resistance, resistance. So you can see price keeps hitting this level and rejecting off of this level. If price has to break above this level, that can be a very good place to look for a long entry, because it's showing you it's flipping. This is a resistance area now. If price gets on top of this, and this is something that I do for every token. Whenever I'm looking at price action, I'm always looking at these resistance, and I will talk more about this on the training on Thursday, because that's why I focus more on price action trading. But you can see this is a strong key level. And then I'm looking at the pivots as well. So like if price gets above this previous month high over here, that could be a very good place to enter on this token. But at this point, I'm actually just waiting to see what's going to happen on Wednesday with the new pivots, because it's the end of the month now. So look here, like, I don't know if you guys have tested this out, but you can with the new feature that I added with the next month's pivots, like I've been playing around with them, and you can actually get a really good idea of where the next pivots are going to be for the next month. So even though we've got a few more days to wait, this is a really little cheat code you can use to kind of, get a little deeper insight in there before it happens. And I've just been going through a few tokens, like just flipping through them and actually looking to see where the new pivots are going to be located. And you can see, like for this pivot over here, if it stays above here, it's going to be above the monthly, which is really good sign. A lot of them are looking like they're still underneath the monthly, and I wonder if it'll change. But if price does not, if the new monthly opens and most of the tokens are underneath the monthly, we might be in for more bearishness. Like it's looking more bearish on the higher time frame. So what's that?
BTC's going to 52,000. We all know it.
Yeah, you see. So I mean, let's have a look at Bitcoin quickly. If it's going to 50, so we will have a clear picture, and more than likely it is going down. A lot of people are saying 52 as well, 50, 52. You can see right now Bitcoin is pretty much underneath the new monthly. If things stay the way they are, it's going to be underneath there. And but we know that that chances are, you can see we've got this on Bitcoin here. We've got this fair value gap down here, and more than likely, we know price loves to get to fair value gap. So this would be the place. This would be the place down here where you'd want to start looking for your swing longs. When Bitcoin gets down to this level, takes out these imbalances over here, and then obviously you will tie this in with the TrendX, the weeklies and the monthlies as well. But I mean, if price can get on top of the monthly, you can see here, if price, okay, I'm going to turn off, I'm just going to leave the projected one on. I think it doesn't stay on. Okay. So if price gets, say this is the new monthly, if price gets on top, that will officially help our bias in seeing that, okay, Bitcoin is now bullish. But if Bitcoin stays underneath this monthly, it's looking super bearish. And all we have to do now is it has to break these lows. And you can see if it breaks these lows, then it's going down to the next, range over here. If it stays above this, if it stays above, or if it stays, okay, we can draw this level as well here. So this is these are kind of the structure points that we're looking at. And obviously we've got the next month's pivot there just as a reference. But if it gets above here, we're bullish. If it stays under here, we're bearish. If it breaks under here, we're going all the way down to 52. Yeah, 52 over here. So it all depends on the pivots, the next month's pivots, and the majority of the tokens, how they're looking in relationship to those pivots. But as you can see, guys, the swing trading strategy, I wanted to actually show you something else right now. So right now, if we scan the market, I just want to change my sharing. Can you guys see the scanner here?
Yes.
Yeah.
So this is, well, it's pretty much still the same as what it was. You can see the monthly, we've got 96% of tokens are underneath the monthly pivot. And now we've got 95% underneath the weekly pivot. And this is from the weekly open. So the week has opened looking super bearish. And if the monthly opens looking bearish as well, then we're probably going to be in for another very bearish week, which means it's going to be to your advantage to mainly look for shorts this week. And then obviously on Wednesday, we'll get a stronger confluence. But for this week, if most of the tokens stay underneath the weekly, it's better to look for short trades because the momentum is not in your favor for longs. I mean, I don't know if you've noticed, but so many of the times you get into long right now, it just kind of goes up and then it doesn't go anywhere. So if you are trading, remember, just stay focused on shorts until this changes. So like I always use this as my barometer for scalping. And if you've got both of them on your side, then it's going to be even a stronger confluence. But I'm always looking to the monthly and the weekly for the higher time frame bias. And then the dailies are the entries. The daily is just going to be in alignment with whatever's happening in the monthly and the weekly. And because we've got 95% of the tokens are underneath the weekly, it means we're looking for shorts on the daily. And you can see here, we've got a 5% market sentiment, 5% bullish, 95% bearish. So things are looking super bearish at the moment right now. Let's see over here. Let's hide this.
Question.
Yeah.
How do I get access to that scanner access?
If in the group, if you just send me a message, I can give you access. Also, depending, because this is only available for the yearlies right now. We're working on a process to make it available for everyone, which should be available in the next 2 weeks or so, because we have to build a system that will manage. The only issue, we don't have a system that can manage basically subscriptions for the monthly members. So right now, it's only available for the yearlies, but in hopefully a week's time, we'll make it available for everyone.
I have the yearly, so I just send you an email.
Yeah, perfect. Then send me an email. I'll give you access right away. Just send me a private message, and I'll get that super quick.
You should see the Scanner X option in the Discord as well. If you're a member on the bottom left, that's where you may not notice it, but those that have monthly don't see that option. They have no access to that section. That's just for yearly and lifetime members. Yeah.
So if we come on here, we can see at the moment that we've got a few. We've got 0 monthlies that are narrow. We've got a bunch of monthlies. See, with these tokens over here, if we go monthly above, so these monthlies are above the monthly pivots, ATA, BNB. So these ones right now, if we're going to be looking for longs, these are the ones that would probably be in favor for longs because they're still above the monthly. So if we go look at them, we can see here, This one's still above the monthly. This one's still, BNB is still above the monthly. Can you see it's above the grids? So with these examples, this makes it so easy for us to see, okay, if it's above the monthly, then we're only looking for long. If you want to look for longs, there are some tokens you can look for longs on, but you just got to be very diligent in finding them, making sure, first of all, is it above the monthly? Is it above the weekly? So look, if I click monthly and weekly now, we can see ATA. ATA is above the monthly and above the weekly. So you can see, so this would be a coin that we could look to do long positions. Just merely the fact that it's above these two. We've got BNX. BNX is above the monthly and it's above the weekly. We can look for longs. High is above the monthly, weekly, look for longs. So if you do want to look for longs, just make sure you pick them accordingly to the monthly and the weekly. And even just the weekly is good enough. So I like to use both of them just because it's an extra confidence. But with Pramod's training, he says weekly is good enough. So you could pick any one of these. And I mean, they're not narrow. There's no narrow. Oh wait, there are. There's only two actually. Only two narrow weeklies that are above. This could be a good one. ORN, which is above, looking very good actually. Nice tight, and you can see it's higher than before, so it's showing there's like this curvature towards the upside. So this could be a good one to pay attention to, ORN. And then you would just come onto the daily. So if it stays above the weekly pivots, then all we're going to do is come onto the daily and look for entries in our locations. You can see we could have got a good entry today. This is perfect. So today would have been a great entry. You can see it's above the weekly. If we come to the daily, this would have been our entry at the range low. Even though it's not the best daily pivot, but that would have still been a nice little scalp trade. On the monthly, okay, this is such a new token. It's not showing on the monthly just yet. And we've got ANKR. You can see, which is a nice, you can see here, look, we've got an ascending pivot. This pivot is higher than the previous pivot. It's nice and tight. It's still above it right now. So it's got to hold that level. If it stays above here tomorrow, then this would be a great coin to look for long tomorrow. And we come onto the daily, you can see this would have been already a great trade today. Just broke above. Okay, we might have actually missed it, but this would be a good one to pay attention to. If this is above the weekly tomorrow, then we're looking for entries in our entry locations on the daily grid tomorrow. Let's see what else is showing. Those are the only two on the narrow weekly, but then these are all the weeklies that are wide, which are still good. The weekly doesn't have to be narrow for you to trade it. It can be a little bit wide. I've noticed like Pramod's will trade it even if it's a bit wide. So here we've got a wide, as long as it's above, you can see here, look, this is above the weekly. That we've got an ascending pivot because this pivot is higher than this one. So this could be a good one. If mobile stays above the weekly pivot, then tomorrow on the daily, we can look for longs. But as it stands, guys, remember, keep in mind, even though there are a bunch, you can see these are all the ones that are above the monthly and the weekly. But remember, if we go to the main sentiment, we can see majority of the market is bearish, majority. So we've also got to keep that in mind because crypto is like a wave. It's like a wave, and usually it follows the wave. So we always want to trade in alignment with the wave, and chances are you can get better trades trading in alignment with the wave, but there are going to be those few tokens that operate differently from the wave, and you can see these will be them. So this is a very nice way to just come in here and find out nice setups. This is where I actually found Sushi. Sushi looked really, really good. You can come in here and search Sushi. Sushi looked really good on the weekly. You can see on the monthly, remember when price gets to these resistance levels, so you can see we've got resistance 1, resistance 2, resistance 3. When they get down to these levels, there's a big chance reversals can happen at these lower, these are support 3, support 2, support 1. Whenever price gets to these lower support levels, this is where there can be a good chance of a bounce happening. And you can see, look, price is sticking onto the support 2 level. It's sticking onto it. So if price breaks above the support level and we go to a weekly, and you can see, look how lovely this looks. We've got a big, this week over here that is wide, gets thinner and thinner. And now we've got a very narrow So there could be a movement happening with sushi. I've put it on my radar. So just keep an eye on it as well, because you can see, number one, my confidence was on the monthly over here. We've got price forming. You can see it's forming. It's like gluing to this support level. If it breaks above this support level, that could be a very good sign. And then over here as well, if price is able to maintain above this pivot, then on the daily, we can look for long positions tomorrow. So another one to just keep your eye on. This one looks really good to me because we had this massive drop. Look at this drop. We had this very big drop, and then it just kind of hung around there. And now it's finding us like an area that looks quite interesting, especially on the weekly. If you ever notice this, guys, you can see, look how wide this grid is. And then the next week it's tighter, and then the next week it's tighter. Can you see it just keeps getting tighter and tighter and tighter? And this specific grid over here is a primo. It's like my prime grid that I look out for in the training. This is what I call like the sweet spot grid, or the A+ grid, because it's so narrow and it's like a big move is prepping up. So I would definitely pay attention to this one. If it breaks this high, this is kind of what I'm marking out. I will look for an entry, or if it stays above the weekly pivot, then on the daily pivot we can look for entries either at the low of the range or the break above the pivot. Those two areas are gonna be our key levels. Let me come back to the chart for a second. Is there any questions about anything that happens in the training today?
Seth, can I ask a question?
Yes.
What happens inside pivot? Now I'm looking at OM, and you got monthly below it, and weekly and the daily are intertwined. I mean, everything is so inside each other.
Let's have a look. What is the coin called?
O for orange, M for Madrid.
Okay. Okay, let's have a look.
Perpetual.
Let's have a look here. And which ones you looking on? Which grids? The monthly?
All of them. Monthly, weekly.
All of them. Okay.
Yeah, I'll put them all. I mean,
let's have a look at the weeklies. Oh, you can see, this one is like more, let me just take this off to make it look, it's more like in a range. Can you see?
Yeah.
So let me go into the 1 hour. But it's getting tighter. You can see this is building up for something. You can see, look how flat it's been. When you see tokens that range for a large amount of time, they're basically, these are the ones that can make big movements, because that's kind of like they're just building slowly, building positions. And often the market makers do this. Like I've noticed, they do this kind of thing to just stay under the radar, and they fill their positions. And then before you know it, it just like explodes. This coin looks very different from a majority of the other coins, to be honest, because it's just kind of staying within the high and the low of the range. Can you see here? Look,
inside the weekly. That's what I mean. When we see the daily inside the weekly, does that have any meaning? No. The daily is inside the weekly. The turquoise.
Oh, wait, let's see. Let me have a look. The daily is inside the weekly.
Yeah, that's why I say inside.
Oh, and inside. Well, things are getting. I see.
It's also monthly.
Yeah, all three of them are having a group sex, as they say, orgy. We'll call it an orgy setup.
It's a pivot orgy.
Yeah, pivot orgy.
Pivot.
Yeah, they're getting real tight and close here. Look, yeah, I mean, this is doing something very different from a lot of the other tokens, which is quite interesting. But if you look at this would have been a great token to actually trade, because every time it got to the low of the weekly range would have been a great entry. Look here.
That's what I was actually
looking at. Oh, is that what you've been doing? Great, man.
Yeah, I've been making. I was telling all the other friends on the chat that I made a lot of money on this.
Great.
In the last 4 days, 3 or 4 days.
And what, you were just waiting for it to get to the bottom of the range? I mean, look at this, bottom of the range.
Just doing long, as pretty much said. Don't do short. I think I did all of them, shorts and longs.
Wow, great. Look at that, eh? Every time I got to the bottom of the range would have been a perfect trade. Back to the top of the range. Look, bottom of the range. This coin is actually really performing so like nice and neatly. Bottom of the range to the top of the range. Bottom of the range.
You know, wow. Martin, is it Martin, another guy on the banter group? He helps out. He trades this coin, so that's why I go into it, because he said it's very stable. It ranges. So, and I thought, well, why not?
This looks like a really nice coin to trade, actually. I mean, look, it's just respecting. It's not doing anything too crazy. It's just kind of from top to bottom. I mean, if we had to take the weekly pivots off, we could see it would probably be so. You'd see, look how nice that is. Every time it got to the low, would have just been a perfect entry at the low of the range. Wow, hey, it's amazing.
Blue lines are great.
Yeah, these blue lines are wonderful. Oh, so were you taking profits at the top of the range?
Yeah. I mean, I even got cocky and left half of it and went for the real top, and I got that as well. On
this one here.
Yeah.
Oh, nice.
I got the other one. Now I'm playing.
So you went from down here all the way to up here. That's a great trade.
No, what's that? No. What are we? That's April. No, we're further up. Yeah, from last week.
Oh, last week. Okay, this is last week over here.
Yeah. This I've got all of these.
Great. Were you only trading this one coin?
Yeah, I mean, that's the one I was making money on.
Well done. And did you notice the difference from just sticking to one coin and not looking at anything else?
Yeah, I think we should do that. It's like having one girlfriend, you know, it's easier. I once had 4, and I tell you, I lost weight. I could see my rib cages, and it's not healthy.
Yeah, I mean, I don't know how that's even possible.
It's not, I tell you.
4 girlfriends, that's just too many.
I mean, no women.
It's kind of, what a good analogy, you know, because like I've noticed as well, if you're looking at just one chart or 2 charts, it's so much easier to track. It's so much easier to know where you're going to enter. As soon as you start looking at like 10 or 20 charts, you get so confused because every chart's in a different position, and now you're trying to keep track. And I definitely think people will make more money when they start looking at less charts. They pick 1 or 2 and they just stick strictly. And I'm so glad that you brought this up today, because it's just such a good example of how well it can work and clarity, you know?
Yeah.
Were you saying that Amir has an allergy to 4 girlfriends, or an allergy that he caught from 4 girlfriends, or are we talking about a different type of allergy?
No allergies. I got married and I got out of that.
Stress, more stress.
Amir, you little stud, you.
That was a long time ago. I'm a wise man now. It's going to be my birthday on the 2nd of May.
Yeah, last week is a long time ago.
Oh, wow, man.
Yeah, I'll be 60.
Exactly, last week is a long time ago.
Really? Wow.
I'll be 60 on
60.
Tuesday.
Well done, Amir. Congratulations.
Cheers,
happy birthday.
Yeah.
Good job, man.
I expect you to be trading and making massive gains on your birthday, Amir.
Yeah,
no time off for you.
I tell you, I'm enjoying this. I mean, this is one of the most enjoyable times of my life, because it's, you know, you've got the power in your hands to make it. Before, you used to work for other people or have your own business, and you're always waiting for customers. This is you. It's all you. And you can be anywhere. You just need your bloody laptop or your telephone. You're so free.
That's wonderful, eh? Super wonderful.
Thanks to you, man.
I love that. Happy birthday, man.
Cheers,
yeah.
Man.
In advance. You give me hope that when I get older, there's still hope.
Look, let's make some money. Let's make some money. Hopefully, next year we'll meet up somewhere where people give you visas for people who need visas, and we'll have a nice dinner together. You know,
great idea.
Where are you based? Where are you based?
I'm in Istanbul. I mean, Istanbul is a beautiful. I am in an island on the shores of Istanbul.
Oh, nice.
Wow.
I haven't been to Turkey, but my intention is to visit this year.
Come, man.
Yeah, I'm based in the UK, so it's not too bad.
Yeah, I mean, I left London, I came here because I tell you, life is much better.
I want to bring my girlfriend. I want to bring my girlfriend just to pet a bunch of cats.
Well, you got millions of cats and dogs.
I
We
saw a
love
video.
strays.
Turkey is like cats get free fed. They all the cats crashed out on like the subway like turnstiles when you're going by. You got to move them to tap your card to get on the subway.
Exactly. I mean,
Right,
if you're
I've
homeless,
got a couple of questions, if that's all right.
Die, but if you're a cat, you'll live. That's what
yes.
Yeah, go ahead, man.
Right, look. First one, probably an easy one.
Yeah.
Some of the candles, they're highlighted in the opposite color. So you'll have like a green candle, but the outline will be red. Like, what's that about? And vice versa.
You know what? It doesn't matter so much as long as it's in the right location and it's the right candle. Because I've also noticed sometimes it's a red one or a green one. It doesn't really make such a big difference.
Just that before until using like this software, your indicators. Is that something specific to Easy Algo?
No, it's not. The candles is just a price action thing. It's just we just created obviously a strategy that could help people, and candles is just an extra confluence to use with the Easy Algo, just to help people get even better entries. There's many ways. You can use the TDIX, which helps, or you can use candles, or you can use both. We're just giving you guys everything you could possibly need to make good
the
decisions.
fact that they've got the opposite color outline in them. You'll have a green candle, which obviously means it's price has moved up, but it's got a red outline. I've never seen that before.
Oh wait, are you talking about
there's
this?
A setting.
Yeah.
There's a setting on.
Okay. So when you open the TDI, I'll explain to you why this works. When you click colored candles, it colors the candles like this. Can you see here? I'll explain to you how it works. So if you come on here,
Seth, I think he has outline. I've seen that on mine sometimes. The candle has an outline.
Yes.
Of the opposite color, which
of a different color. Yeah, it's a red outline. Yeah.
Yeah, because what it'll do is, okay, my candles aren't the conventional candles, but I'll show you. If I have to change them, you'll see it'll end up doing that. Can you see there?
Is there a benefit for that?
Yes. I'll show you what the benefit is right now. So the benefit is this: if you come over here, I'll turn everything off and let me show you how it actually works, and then you'll have a understanding. On the TDIX over here, we've got a slow MA and a faster MA. Can you see when they cross? So this red line over here is the slow MA. When they cross, when this white line gets on top of the red line, this point shows a very good entry location. So what happens is the candles will change green at that location.
Okay.
So it's basically just giving an extra confluence of when's a good time to enter. But obviously, you don't want to just follow this blindly. So like at this location was the bottom of the range. So then when you get this candle confirmation turn green over here, that would have been a place where you could have looked to enter your long.
So it's just the candle I'm referring to, though. Literally, it's like a green candle, full body green candle, but it's got a complete red outline, not the wicks, just like the whole outline of it.
I'm not sure. Maybe
change it on the trading view. If you go.
Yeah. I'm not sure. Maybe send me a message or ask questions in the group, and then I'll help you.
Open it is okay.
All right.
What's that?
Thank you.
Cool.
Somebody needs to mute, I think.
I can mute them. Can mute. Anyone else got a question?
Going back to that one question that one guy had about that whole orgy thing about all the pivots in the same area. How do you trade that? What are you looking at?
Okay, let me get that back, and I'll go there right now. Just want to turn this off, and let's have a look. Okay, so that was let's have a look. Oh, so yeah. So let's put the daily over here. I mean, when price is stuck inside the grid, it's not recommended to trade. So you want to wait for it to either break out. So right now, I wouldn't do anything because price is inside this weekly grid. You can see
indecision.
Yeah, it's indecision. So either wanted to break out and maybe do a bit of a retest, or break to the top to get out the top. So whenever price is in the indecision phase, we want to wait for something to happen first. So we either don't trade that asset or we wait for more confirmation for it to get out of the actual grid. But the way this token's been playing in the past, it seems like it's just ranges. So you could always wait for it to get to the bottom of the range. I'm sure that's your strategy, Amir, just waiting for it to get to the bottom of the range again to look for a long.
I'm already in on the 5 minute. I got in on the gray line.
Oh, you're already in? Okay.
Yeah, I'm already up 20%.
No ways.
Yeah.
Jeez, you're busy trading and doing the session.
Are you using leverage as well? You're using leverage as well, Emil?
Sorry?
Using leverage as well?
Yeah, 10x.
Great.
I've got $20 in. I'm $6 in profit. 7.
That entry would have been confirmation after the second candle moved past 50% of the first 2 red candles, and then your stop underneath the wick.
Yep.
What was the potential percentage of loss between your entry and underneath the wick?
Well, I'll tell you, I haven't put my stop loss in at me. I'm just watching it.
Bad boy.
I am.
You see, he's been trading this. How many days have you been trading this coin?
I don't know, 4 days.
4 days. When you trade one coin for a long period of time, what's that?
I haven't lost yet.
You haven't lost it. Yeah. When you trade one asset for a long period of time, you start to learn the coin. You start to get more confident with the coin. I mean, like, would you say that you've got like a feel for this coin?
Yeah. Look, Seth. Right, you see all these red candles. I got out. I took my profit at the top, and whilst we were on the show, I looked at that. I saw these red candles come down. They passed the blue. They passed the daily. Then they passed the blue. The whatever you call it. Then they passed the gray. Then they passed the last gray. I got in there. I said, that is a good area. Then I looked back also to how it was behaving. So I said, that's a good area to get in. I got in and I watched it. And I'm looking at the candles, the dojis or whatever is happening. And I'm sort of, and I saw the TDX has got the shark fin at the bottom also.
Yes,
I'm watching it. And what I'll do in a couple of minutes is I'll just put my stop loss above my entry, so I'm in profit. Then I'll move my stop loss up and up. So if it does a reversal, I'll still get some money out.
Fantastic.
Beer money.
No, that's fantastic. Nice. Yeah, there's definitely an advantage to sticking to one coin over long periods of time and getting familiar with how it moves, where it turns around, that kinds of thing. So that's awesome, man. I'm so glad that you haven't lost on this coin yet. It's such great news.
It's easy out, man.
As per Luke's question, I just dropped an image of what he was discussing in your Discord DM real quick, if you can see that.
Okay, cool.
Because I've been curious about it too, and I'm glad he asked.
Okay, let's have a look.
What's that? Sorry, the candles.
Yeah, the outer, like the solid.
I share
center.
my screen real quick. It seems to be disabled, but I've literally got it ready and waiting.
Okay, let me.
I found it and showed. It's in your. I know exactly what you were saying.
I saw it, and it's the TDI settings. It's the candle color settings. If you turn off the TDIX color candles, it will turn off.
And I benefit from having that there. That's just the crossover, like you're saying. The moving averages crossing over.
Yes. So you're not really looking. You're basically just looking at the color of the candle. If the color of the candle is green, it means the slow MA has crossed over the fast MA and it's above it. And only when it crosses below it again will it turn red. So it's just a added confluence, because the fast MA and the slow MA, a lot of traders will actually trade on the cross, the MA cross. So it's just an extra confluence, but it does create confusion in the candles, because then, you know, a red candle will look green and a green candle might look red. But it helps you hold your positions without exiting a trade at a red candle. For instance, if you're holding a long and you see a few red candles, some people can just exit the trade. But if you follow the MA, it can keep you in the trade and possibly. But yeah, you can turn it off if it's something that doesn't work for you. You know.
We're just trying to learn. You know.
No, for sure, for sure. Yeah. Please, we're here to share, man. If you got any more questions on it, like, happy to share as much as you want.
Thank you.
Cool. All right, guys. I think that's time to call it an end. Got dinner waiting for me, and I think it was a great session.
Do we have any easy algo folks are getting in on the second gummy airdrop?
I'm actually waiting to hear from them. We've all asked, so we're waiting. I know that they're doing the airdrop now for Bybit users. If you sign up with Bybit under their link, they'll give you an airdrop. And there's gummy farming on Banter Bubbles. That's going strong. And I think there's still, those are the only ways. I think it's Bybit Exchange and Banter Bubbles at the moment. We've all asked for, Sniper Club, Whale Club, and we're waiting to hear if they're going to give us an allocation. It would be great if they give us another one. I mean, that would be amazing. But you'll be the first to know.
As always, guys, after the call, I'm going to open the voice chat. If you guys want to just talk tech stuff or market stuff or Web3 stuff, I'll be there. And we tend to run for a couple hours, but only as long as there's people there asking questions. So if you have any general stuff, just want to talk, get to know each other, please join us in the voice chat. I'll drop a link to that in the answer questions and the traders chat.
Nice one. Appreciate your time, sir.
Thanks, Power Friend.
Cheers, awesome, guys. Thanks for joining. Great to see you all.
Be well,
Thank you,
Seth. Enjoy your dinner.
Thank you.
Yeah, you guys too. All the best. Happy trading. See you in the group.
Thank you.
Pleasure. Cheers, everyone. Bye.